Scott. Thank you. Hello, everybody. I see some familiar names in here. Good to see you guys. You're not going to hear Andy's voice. Andy is traveling with David Farriott this week, doing a presentation to a big professional group in Minnesota. So I'm flying solo. I'll do my best to keep talking, but I think we might go about 45 minutes today. Just a little heads up for y'all. So let's go ahead and get right into it. The trade of the week. A reminder, of course, that we're a software as a service provider. We're not registered investment advisors. So anything you see or hear today on the screen, please do not take that as investment advice. If you guys need personal investment advice, you got to go seek out the people who took the fiduciary responsibility exams and such. So good, we're through that. All right, so this is a big deal, especially for some of you people who really like. I see some, I see some recurring names in here. If you guys want a chance to come down and press the flesh and say hi, it's going to be our third annual Trade Ideas Summit coming up. Last year was a big success, and this year is already shaping up to be an even bigger success. We've got a great venue downtown, way above the street, in a high-rise building. University Club, we've got excellent speakers. Dr. Brett Steenberger, PhD, is probably one of the better psychologists that pertain to traders' mentalities out there. He's been sought after by a lot of smart people, including the person on my next slide coming up. Where is it? That slide there, Paul Tudor Jones. Dr. Brett Steenberger used to work with Paul Tudor Jones and kind of help them keep their heads straight in their billion-dollar quest of their fund, as well as Brian Shannon, who spoke last year. Another great speaker and technician, chartered, certified, I always forget what CMT stands for, chartered something technician, I forgot. And then JC Perez, another great CMT, chartist, technician, does a great job as well. And there's a few more people that are not on this docket, but mark your calendars for October 20th. It's going to be one full day packed and chocked full of a lot of good stuff. We're really looking forward to it, and it's shaping up really well. So there's still tickets available. TradeIdeasEvent.com down there at the bottom will get you more information on that. Moving forward. Oh, look at that little animation there. Thanks, Rudy. Just want to remind people the amount of education we try to provide, including this current webinar. We've got the live trading room with usually hundreds of people in there every day watching Barry Anderson share his desktop and his Trade Ideas platform. Helps people with questions, technical support, but there's also a real good handful of active traders in there as well that are really good to follow, and it creates a really nice environment for a quality trading room. And the best part about it is it's free. There's $99 chat rooms or trade rooms out there that might give Barry a run for the money, but you really can't compete with free. And so we'd like to tout that throughout the week, bell to bell, Monday through Friday. It's a free join. Just go to our website and look at the top header and find the free trading room. All right, thank you, Waleed. Chartered market technicians. I don't know why that escaped me. I always want to read something else. Oh, David, yeah, you missed the event in Minneapolis. You could have run into Andy, but we're hoping to see you down here October 20th as well. I'm not sure what hotel. The hotel of the host, DFD, we're going to be at the University Club downtown in San Diego. All right, again, I don't have Andy here to help me typing out, so I just happened to glance over and saw a couple of questions that needed some immediate responses there. So thank you guys. Back to why we pride ourselves on the learning curve. We've got a lot of education, and I live near Miramar Air Force Base, Air Base. Let's just close that window so we don't have to keep hearing Top Gun rebooted. Geez, they're even coming through my windows now. So daily, we have these 5 p.m. Eastern webinars like you're tuned into right now. Yes, Iceman, yes, I hear you. Yes, yes. Go get the girl. Monday through Thursday, 2 p.m. Pacific, 5 p.m. Eastern. We have these webinars, and they're specifically geared. This one's the trade of the week. Yesterday was canceled. Jamie is out of the office for the week. Tomorrow you'll have Brad Williams talking about sorry, somebody just sent me a text and threw me off. Talking about the Q&A of our webinar of our technology platform and where it's going from here. etc. And then Trading Studio with Andy. He'll be back in town for his Trading Studio duties on Thursday after market at 5 p.m. Eastern. And then Friday, we always have this 3-hour 11 a.m. 2 p.m. session. Anyone can come one, come all, and you tell us what direction you want to go in. We have more time to settle in and build a scan or go over things that we might not be able to go over in these other webinars. So Friday support sessions are another great addition to our webinar series. And then, of course, if I flip to the next slide here, Trade Ideas University. The beginner, intermediate, and advanced are broken into 4 courses. They start every Monday, and then they restart over again every Monday. So there's about 6 hours of live content throughout the week, and those are typically at noon Eastern time. So if you don't know how to get into those, send us an email at info@trade-ideas.com. We'll point you in the right direction on how to sign up for the Trade Ideas University. All of that, has translated into a great subscriber growth. We're very proud of our parabolic growth. May even be on a slide forthcoming, but last year we were included in the Inc. magazine fastest growing 5,000 companies, around 4,100. Well, this year we just found out we have leapfrogged to the 3,000th position on the Inc. 5,000 fastest growing companies. So thank you all for your support, and that graph gives us a good idea. And then here we are at the theme of the webinar, and that is always man and machine combined. And the Paul Tudor Jones quote is, "No man is better than a machine, and no machine is better than a human with a machine." So, I love to give this example, and I'm going to do it again. Some of you guys have heard it before, but man and machine, okay? Don't fear AI, don't fear machine learning. They're going to work hand in hand with us in the future. And a great example of that is the Watson, IBM Watson AI, and how they taught it to read the journals of medicine, and then they gave it to the clinical head of oncology. I forgot what department it was. It might have been Johns Hopkins or something. And he was very, what's the word? Not very, I'm trying to think of a word. He wasn't exactly down with it, but he was willing to see what Watson could do with him and his team, looking at DNA sequences and finding the best cancer treatment for each individual person and their DNA makeup. And that's a 2 or 3 month human endeavor by themselves. But Watson came in and just gave amazing ideas and amazing suggestions to the oncology department and all the doctors there, and they were all blown away. And they all immediately realized that we shouldn't fear AI and machine learning. It's here to help us. It's going to curate a nice batch of ideas for us to still be the human in control and decide, what to ultimately do with that information. So I like to draw on that IBM Watson example, because AI and human and machine learning just did a great job for skeptical, that's the word I was looking for. And once the head of the department saw the results and the type of recommendations the AI was giving, he was a believer in that exact moment. So great article, great story if you ever follow that. I like to touch on that every now and then to remind people it is man and machine. We're not turning everything over to machines. All right, so here is our agenda for today. Again, flying solo, so if you have a question, it might be better to hold till the end. I'll do my best. We're going to go through market recap. We'll go through a very good day for Holly. I've got a little bit of a sermon on change is the only constant when it pertains to open stop orders, and that's a good segue right into the trade of the week. It's got some comments about last week on Sono and this week on TCMD, and primarily why we didn't call out a specific stop level to the penny, and I'll touch on that a little bit more. And then last week, I'm going to pull up the 8 alerts that I shared with you guys that I derived from Holly on that day, and also from a new scan that we're working on. And those seem to work out okay. So we're going to rehash that, and then we're going to reset another 8 or so stock price alerts from today's data, and see if we can get some value out to you guys, a little parting gift, so to speak. All right, so let's get started. All right, we'll minimize this, save that for the end. And let's go to the SPY where I like to start. This is the benchmark, S&P 500. You can see intraday, we had a little gap up and then a little pinnacle midday, and then kind of a selling off into the close. And I'll even let you know, post-market, there's a bit more selling coming in, which is interesting, but we'll take a look and see what that really means. All right, so S&P 500, and when we last met last week, guys, I think I was basically saying there was no bear case to be made for the most part. The pullback was good if it was going to dig in, and I felt that an assault on all-time highs was really in the cards. It was just a foregone conclusion, fait accompli, however you want to call it. And so we got that. And what I also said was I have a pretty good feeling we're going to test those all-time highs, but what happens after that test is anybody's game. And we had a little bit of that little wick action today. We poked our head through and actually did not really close above that line, which we needed to, because back here, let's see, let's take a look at that level, 286.63, 286, that's close enough for government work right there on that orange line. So as it is, we poked above, spent a couple hours above, and then retracted and fell right back into the zone here. It's not really a major red flag to throw up, but ideally the bulls would have liked to seen a close at all-time highs and a close moving through that level rather than the sellers jumping in and pushing it back. But that's always a possibility on these types of trades when they break to a new high. There's a contingency out there that likes to just jump in and become a seller at those levels. It'll probably take us a few days to see where we go from here, but yesterday was a gap up and a little floating doji. Today a gap up and a little bigger doji. I've seen dojis string 6-7 days in a row and still pick a direction, so we'll see what the overnight market brings. But I'm not seeing too much really to be concerned about, especially when you've got the S&P is making a new all-time high. NASDAQ was a leadership vehicle for a while, but has since pulled back and actually had a pretty nasty intraday pullback. Kind of opened up, traded higher, and then gave all of it back and closed right about where it gapped up this morning. And the same thing going on here. I'm not going to speculate as to why, but there's some selling again post-market in the NASDAQ as well. Sorry, where do I need to go here? Turn off my post-market. Now over in yeah, you're right, Chris, and I just don't know what to make of that news. So every day it's something, the market gets spooked and then it just disregards it the next day, so it's not even worth talking about. IWM, the Russell 2000 ETF, making some moves today, showing leadership. Looks like IWM also traded at all-time highs today, above that orange line for the most part. Okay, and IWM gave us a little treat. It actually closed above all-time highs. So the close today in IWM has never been higher. Small cap stocks might be leading the charge tomorrow, perhaps. We'll see, but that's interesting. It's been range bound for a while, and now it's starting to make a move. So tomorrow, if you happen to see Holly spitting out some trades on Little Big Guy or Mighty Mouse, those are both small cap strategies. And so you might want to give maybe a little extra weight to some of those smaller price stocks if you see any coming through tomorrow in the AI based on the way the Russell 2000 closed today. And then lastly, the Dow, it's bringing up the rear, but still it's got a lot of work to do to get back to essentially what the S&P did today, which was take out new all-time highs. Definitely a lot of meat still on that bone over in the Dow. But still, guys, no real major case to be made for caution or fear or bearishness. There's just not much to say, and on that side of the court when you made all-time highs in the S&P 500 and the Russell 2000 ETFs, respectively, today. Let's see if I had anything else I wanted to touch on. I've been looking at some of these other ones lately, like Twitter and Facebook. And Twitter's having a huff. It tried a little bit today, but that 20-period moving average kind of caught it. What did Facebook? Facebook kind of closed weak as well. Gonna keep an eye on those two going forward. So that's the market recap. Again, nothing to be bearish about at the moment. A little bit of aftermarket weakness, but as Chris points out, Washington news, trade news, all that type of news always seems to be a bit of a hiccup and then just picked right back up and like it didn't even matter. So I'm not going to concern myself too much with what the market's doing after hours. We've got all night still for the buyers to come back to their senses. All right, so having said that, I believe the next moment we're going to look at here is going to be the Holly recap and Capital Wow. This was a pretty interesting day, and what I really want to harp on here as well is not only the trade by trade data that comes out of Holly, but some of the bigger picture stuff, like directional bias, all right? If we look up here at our Holly segments, and yes, we're still at work trying to get a dashboard together so we can see all of this data, all three, rather than one bucket at a time. But on our thumbnail data points up here, we can see, closed up almost 7. This thing was up over $7 midday. Holly 2.0 was up over $7 midday. And I think Holly Neo was even up even more, maybe 12 or 11 at one point. This is probably one of the single biggest aggregate days, if you add all three segments together, that I've seen since we've had the additional 2 Hollies. So much going on today, but I want to really just try and keep it simple. Yeah, there's a lot of great trades. Look at that target hit, target hit, target hit. We want to see that all day, every day. I mean, the AI was on fire today, but what was it telling us aside from these individual trades? Well, do you see any short sells? I see one short sell out of all of these, and this was towards the end of the day, literally in the last hour of the day. So for the entire scope of the day, we had nothing but green longs staring us in the face on this one, which is Holly Grail, the first one. If we go to Holly 2.0 and look at the closed trades over there, we also have nothing but green long bias staring us in the face. And then just for doing it, going to the third segment, Holly Neo, which was really hitting the ball. There's 3 targets hit over there again as well in the $2 profit fashion. Nothing but longs. So, you know, going into the last hour, we had 0 attempt at a shorts, except for that one attempt at maybe 3:30 Eastern. That's telling you guys that if you're sitting here and you've got a reason to try and want to short things, and you've got a short bias for whatever reason, well, all you have to do is look down and see that the unemotional, statistically probable, casino odds generating AI is disagreeing with you. And you really don't want to disagree with the AI, because we know the AI has directional bias. I'm sorry, it has statistical probabilities behind it. So when you're directional bias, if you want to fight the tide and try and go short today, you're really you know, running into the wind. So directional bias was a great example today. One more example, it was outside of Holly, but you know, my friend Jamie always looks at this compare count window, and I like to look at it too about 15-20 minutes after the open. This is looking at all the S&P components. So about 20 minutes into the open today, as things were really getting going, there was a bias to be shown here as well. 58% stocks making new highs today in the S&P, and only 42% making lows, so almost 60-40. And that's really a viable chasm to make a decision that long might be the bias of the day, according to that compare count window. And then as the day progressed, Holly was basically saying, you know, I'm not trying any shorts. You're welcome to, but I'm here to only play statistical probabilities, and I don't see any probabilities going short today. That's one element that you guys can take away from the AI. The other is the risk on and risk off. All right, so I mean, here's REV. Here's an example. Holly got out because it hit its target of $1. But was there more meat on that bone? Hell yeah, there was a lot more meat on that bone. The risk off has just been really outperforming, running circles around the risk on. Excuse me, backtrack. The risk on has been running circles around the risk off as of lately. And for those that are maybe confused, risk off is nothing more than the totals as the AI exits during the day. And risk on is those same trades, but counting the aggregate totals as the bell rings at the end of the day. So risk on is basically what would those trades be doing if they remained open. And again, that's something that can be translated into your method. If you're long 2 or 3 stocks and they're doing pretty well, and you're starting to get into that method where the emotions kick in, and you look down and you see $300 or $400, all you got to do is hit one button and that money goes right into your account. But remember, in trading, we're wired to get out a little bit too early. We really need to make our money by letting things run and having patience. And patience is quite the virtue in this business. And so when we see the risk on, I could toggle back and forth. Risk off was up $5.63. Risk on was up $9.38 in that segment. And I'm not going to go to the others, but the other segments were the same. So Holly was, you know, taking quick hits. But the real money was being made and sitting in those. And how do we know what to do, risk on, risk off? Well, that's what's being shown here. It's like flying a flag at the beach to show you where the winds and the currents are. So back to your example, if you're looking down and you see that $300 or $400, you know, P&L, and it's taking every ounce of energy you have to sit on your hand and not hit the sell button to book that profit, well, you could consider a couple things. You could consider looking up and seeing if risk on is just crushing it. There's really no reason to think that your trades might not do the same in risk on by letting them, you know, continue to evolve into the close. If you can't do that, then selling half is always a great solution, guys. If you're not sure if you want to stick around for more risk on your trade that you're in, looking at Holly, showing you that that's really the order of the day here, and you just can't get yourself to keep the whole thing on the table, then take half off. Take risk off on half and let the other half run on risk on. Now, I'm not saying do that on days when risk off is showing us the way. That would be a day when maybe the S&P's gapped up, then went negative, then came back to unchanged, went negative again. Well, that wasn't the case today. The case was giving us a backdrop of a market for the most reason of a nice morning all the way up here. And this was about the time of day when I looked over and saw those values just crushing it on Holly. Yes, there was some given back because risk on gave some back towards the end of the day. It's going to kind of mirror what the general backdrop of the market's doing. So rather than focus on trade by trade, I mean, I just want to highlight a few things. Holly just absolutely killed it today. The casino odds are in place and they're never going away. Holly's just going to continue to get better as we submit better strategies to it and fine-tune things, and also help create that dashboard to help the users get better value out of what's happening in real time. So I just wanted to not focus on real individual trades, but more of what was happening in the bigger picture on the rising tide today. Long was the order, not going short, and staying in for longer than you might want to. Risk on was definitely the order over risk off. So that's just another way I want to show you guys on how you can use the AI Holly. And I'll come back to a few trades that I found in here, but again, this was just a great day. I mean, we could select many trades. It wasn't too many in each segment, only 19 in the middle Holly 2.0 segment, but yeah, we'll come back and visit a few trades later in the segment here. So unless anybody has any questions, I'm going to move on to the next topic here, which is change is the only constant. All right, I'm going to talk a little bit about stop orders, but mostly, if you guys are going to survive in this business, I've seen a lot of changes over the 22 years I've been trading markets and price action, a lot of changes. I've seen a lot of people do really well and then not be able to change and then absolutely blow up their account, and then they're back to zero, because they couldn't figure out how to change a market that worked for them. And when things change, if they don't adapt, they're going to get taken out. And what I'm specifically pointing to here today, I'm going to start with last week's trade of the week, Sonos. I had a good day today. It was almost up in the 22, 23 area. But what happened last week was we gave a specific stop, and it was below this candle right here, below this red candle right there, excuse me. So I'm going to draw that line really tight at the bottom of that candle, so we just have some understanding what's happening here. So an actual drop dead value stop was put out, I think, at 1650, and it was the low of this candle here. And as typical, and this is what I'm going to preface it with, this has been happening just a little bit too much, and it's been happening enough to where we're going to make a change. We're going to adapt because there's something going on here, and I'm going to explain what's going on, and it's not cool, and we can't change it, and we don't have to like it, but we have to accept what is. And that is, this particular day came down and just pecked at the stop price by about 3 or 5 cents and then bounced right back up. So what's happening down here, guys? You know, I bet there's a lot of you out there that use Robinhood, and you think it's pretty cool that Robinhood doesn't charge any commissions and it's free. But what do we now know about platforms, software platforms that are free? If you're not paying anything, you're the product. And so what Robinhood and what E-Trade and Ameritrade and Schwab and Fidelity, all of them do it. They're selling you guys out, all right? You're not going to want to hear this, but they're selling you out. They're selling your order flow, making money on you, giving your orders, whether they be buys, sells, or in this case, we're talking about good till cancel market stop order, all right? Try and get this out of your vernacular, good till cancel market stop order. Unless you absolutely have to use one during the day when things quiet down, that's fine. But on the open, these algorithms that are paying for the order flow to find out where the 4D chessboard sits, they can see things we can't. And I'm going to go back to the fact this has happened about 3 out of the last 6 trades. I'm not happy about it. What I think's happening, guys, is we put out a hard stop order. All right, this is growing in popularity, remember. All those stop orders get plugged in, and what do you think those internalizers like Citadel or Virtue see on a stock like Sono? They see a shit ton of sellers throwing in the towel at 1650. They're all at 1650. And so I'm going to take responsibility for that, but I'm also going to take responsibility to stop giving out hard stops. So people can start to maybe loosen them up a little bit, scatter plot them a little bit better, and not give away an edge to what would otherwise be a good trade, and that would be Sonos here. It's just a damn shame that that's the way the market works, and the SEC doesn't really care about the little guys. They're looking after the big guys, and they're making a good living getting the ability to pay for the 4D chessboard view of where everybody sits that we don't have. So therefore, going forward, we're not going to give out a cold, hard stop order because everybody just puts in that same level. And I believe it's my hypothesis that that's what's happening here, because good trades are getting stopped out for no good reason other than the AI gets close, it's in the neighborhood, 25 cents away, and all of a sudden the algos all agree. We can go down and knock down all those pins and we can still make money shaking down the shares. So, yeah, David's tend to be carried, never been tempted to ask them outright. You should just freaking ask them outright. Are you selling my orders? In other words, E-Trade, if I put in a good till cancel stop order and go to my job, are you making a profit on me giving away that information? Be curious to hear what they had to say. But I mean, you can tell I'm a little frustrated, and it's been that way for a while. But the point is, I want to turn lemons into lemonade and say that we have to learn to adapt. And if that is, in fact, what's happening here, then going forward, the trade of the weeks are going to have very loosey-goosey areas and ranges. You guys are going to have to decide that, because if we all get together and collectively put in a stop price, I've seen it happen way too much in the last few months. And I think as this thing gets bigger, it just makes it easier for them to find out where the pins are and knock them down. So we don't want that anymore. So that's that. Sono turned out to be a great trade. Unfortunately, if you read the stop to the T and you got out with everybody else, then you feel the frustration that I've felt many times over the years. It's not the first time and not the last time the train's going to leave the station without you. But that was last week's trade of the week, and that's why going forward, we're not going to see hard stop levels. We're just not going to give them what they want. All right, we got to adapt. And if you can't adapt, change is the only constant in this business. And again, Robinhood, for people who trade on that, it's not free. These are the kind of things you don't realize you're giving away when your broker's basically selling you out. All right, let's go to this week. TechMD. This one was found from a new scan that Andy's working on. We don't have it available yet, but the minute it becomes an actual filter that's in our library that everybody sees, trust me, we'll make a big fanfare about it. But it's basically looking for composite scores, looking at fundamentals, looking at technicals, and giving them a score. And at the very end, after they've gone through the ringer, if they have a high score above 90, in this case, we have I'll just pull it up for you here. We have a scan called the composite above 90, and that's where this one was found. Okay, again, I'm not meaning to tease you. We'll have this available in a week or two when we get the filter built. But right now, it's kind of under wraps. And that particular stock was found on Friday on that composite rating. And what I really liked about it was obviously it has great fundamentals. Otherwise, it wouldn't be on that composite rating. This was, in fact, not a 52-week high, but a all-time high that it broke out of. So I'm going to draw that line right there. This is what we were working with on Friday. Beautiful move up. Not too much give back, sideways, sideways, sideways. Here comes the 10-period moving average. The price fears the 10-period moving average, doesn't even allow itself to touch it. It's repelled by it and then pushes higher. And then we get a small gap opening yesterday. The good news is we are closing above that resistance level. Unlike the S&Ps today where they popped up and then wicked right back down into the range. No, we got a decent close. So TCMD is working pretty well. It's also got a short float in there. It says at last glance of 17% short the float. So if that's still as high as 17, there could be some extra rocket fuel to propel the shorts as they cover and get out of this thing, because probably one of the dumbest things you could do would be sitting short stocks at all-time highs. I don't know too many people who have been successful doing that. All right, so that was the trade of the week. Again, we'll see what this week brings, but don't expect a hard stop on Monday. It's going to come up to you guys, and I'm going to start calling your attention probably more and more to the swing stop. Even though this one is deep down here out of the money, I had mentioned in the webinar that the blue 50-period moving average might be a decent area to surveil when you guys come up with your own stop levels. And we try and confuse these damn algorithm market makers who are paying to suck on our blood. All right, that's enough for trade of the week. let's move into what we have next, which is, okay, so we talked about changes the only week, only constant stop orders. The only other thing I would add, guys, and we should do this all the time in reality, is if you need to use a stop order, that's okay, but if you can be near a machine and monitor your position at the open, I recommend pulling those stops at the open. And then if you need to turn your back on it later in the afternoon, you could probably put them in. But the reason I say that is the time of day when those damn algorithms seem to work together and collude against us is usually in the first 10 minutes of the open. So if you can survive that come out roll, which is a good craps terminology, if you can survive that first 10 minutes in the market without getting stopped out, then it's a lot more easier to just put in a stop order and go to your other job. Well, yeah, Glenn, that's kind of what I'm talking about right now. I mean, there's, you know, they are a necessity sometimes, but I think the way to answer your question, how do you feel about trailing stops? Oh, trailing stops. Okay, I'll get to that in a second. I think in terms of what I was saying on the good till cancel open market stops, you really, really want to babysit those things in the first 15 minutes and pull them if you can. And you'll be amazed if the price does come down close to you. Sometimes by the time you can react to the fact that the price is coming into you, it's going to bounce right back up. Not always, but generally speaking, the volatility in the opening minutes is crazy, and that's where most people get stopped out of their good trades. Now, Glenn, trailing stops, you know, Holly uses trailing stops. As a matter of fact, I might even make this for next week's content. And Jamie and I were noticing a lot of them, the profit save, okay? Profit save is a trailing stop. So here's an example of profit save from Holly in TSRO, which I think might be one of, yeah, it's going to be one I'm going to mark up here in a minute. This green shaded area going from dark to light, that's the area in which the exit reason was deployed. So we had a push higher, and then that red candle pulling back, that was the trailing stop. What I've noticed, Glenn and everybody else that use trailing stops, is it seems like, and I'll go back to what I was saying earlier, the risk on has just been crushing it. Well, risk off is taking money off the table, whether it's a sell at highs or a sell on a trailing stop pullback. If you're really inclined to lock in money and you really need to lock in money, maybe do a trailing stop on half and see if you can let that other half work for you. I mean, usually that's my response to any trading scenario, because that particular move wipes away a lot of the anxiety and the emotions that are detrimental for holding positions and being patient. So I don't have anything against trailing stops. You can't go broke taking profits, but the real money is made by holding on. So I'm glad that resonated with you, Glenn. All right, so now is the section that we're going to go and do some markups. But first, those that were here with me last week do recall that we marked up 8 charts together, and I basically left those as is and didn't add to them so we can make a point here. These were the ones that were marked up last week. TI Composite, that's the one that I just brought up. We're going to pull some from there, and then I pulled some from Holly. We had some alpha that was generated from last week. There's that PACE moving higher. It looks beautiful. Let's see what this one was. INGN, again, still hanging in there. There's nothing wrong with this chart. Look at the way the 10-period moving average is holding the price action up there still. If you were long this one, I wouldn't probably think about getting out until a close above that moving average. But, you know, there was $9 generated for the most part on the ones that we marked up last week. The only one that didn't make money was this one, and it's actually not doing too bad. It's still hanging in there. But let's go ahead and close these down and delete them. I'm going to highlight all 8 of them, and we're going to delete those 8, and we're going to start from scratch again. So let's minimize that. I have pulled 5 symbols. As I usually do at the end of each day, I'll go through all of Holly's trades, and if I see something I like, I'll set up a price alert to make sure I don't miss it if it does trigger the area of interest. So let's just keep this chart up, and I'll type in the first one, TSRO, which we just saw from my example. What I like about this is it's long base, and it's coming out of that nice base with good volume today, a good volume candle. Probably could be some meat on the bone up there to close that gap around that area. So maybe a decent move tomorrow. So today's high is going to be our trigger plus a penny, 31.28. So I'll just eyeball it, and we'll go 31.29. And we got this one from Holly. So I always know where I found it. All right. Again, maybe just a quick little move up to fill that gap, and might be some alpha hiding in there. Let's see here. The next one I have is Oshkosh, O-S-H-K. No, did I do that wrong? OSTK, overstock. Excuse me. I'm guessing that this was earnings back here. Let's see, negative 7 days, 8 days. So 1, 2, 3, 4. Yep, that was it. So look at everybody that chased the earnings in overstock up here at 46.97, 47. They are just not happy with themselves for buying such a large gap up. Somebody did it. Now they're maybe still in it. Maybe they sold out here. Maybe they waited for a gap fill. It didn't bounce and they sold out down here. Well, this thing has been wringed out like a dirty rag as far as I can tell. And a nice support level down there on that swing stop level, riding 3 days basically down here around 29.70, 29.50 with finally a little green candle. So I'm going to look at yesterday. Yesterday's high and use that as resistance. Yesterday's high was 31.55, so let's go with 31.56. Call that a simple bar reversal. Oops, 56 from Holly. Do you think those people that bought up there at 47 would love to have the opportunity down here? I bet you they would, because this is typical of what I've seen. 5-6 days to squeeze out the weak hands after earnings. Technically, it's showing us a nice base. That base corresponds roughly with this base over here. So I see nothing but upside. If it doesn't go, you have a real tight out just below today's lows. So let's, that one's in there. All right. What's the third one? BPOP, BPOP. Like the big move back here, this was probably earnings for the most part. I bet it was. Yep. And then not giving back too much price, but a lot of sideways action, sideways, creeping higher. And we just basically busted out of this range. I'm going to mark up there today. So I think if there's any follow through tomorrow, I'd like to know about it. I love the way that chart looks. So we're going to look at the high, 52.46, right click, 52.47. We also got this one from Holly. And on to the next one, BDC, Boyd, David, Charlie. All right. Again, kind of a trend reversal. Big move back this day. This was probably earnings. Looks like, yeah, 13 days ago. Gave back some, but not all. Gave back a little bit more. Consolidating. Now this red 20-day period's kind of forcing the price action back up. And I think if it can take out today's highs, it's definitely going back up to these levels and might even have some oomph and enough push behind it to even go higher. So we're going to take today's high and mark it up plus a penny, 71.84. 71.85. We found this from Holly. And the last one that was derived from AI today after today's trades was cool. I like this breaking out of this little range down here, a little sideways, 4 days of beautiful sideways doji action. The AI saw something today. Look, there's a volume bar right there. That's where a buy tag was. So maybe the volume's coming back in to start this thing back up. Starting with our intraday chart, Holly saw something she liked. Backing out the time frame to our daily chart, really nice consolidation here. I almost call this like a bird in the hand trade, where the moving averages are coming up to support a nice sideways action. Hopefully that's the bird and it's ready to fly tomorrow. So we'll take again today's highs and go up a penny, 26.49. We'll go 26.50 and remind ourselves we derived this from Holly. So now we got 3 more I want to carve out. And again, these are from the soon to be released filter called the Trade Ideas Composite Score. Right now it's a custom filter that we're playing around with. And it's giving me interesting ideas of stocks that look really good on the daily chart. So again, here's our topless window. I say it all the time. T windows work hand in hand, a nice 1-2 punch with the price alerts. So let's take a look at the first one that stuck out to me. It looks like TTD, Trader's Desk. The Trader's Desk. All right, earnings. Yep, 7 days ago, 8 days ago, boom, earnings. Give back, not much price give back. Sideways action. Yeah, we got a lot of sideways action. And look who's coming up to meet the price action, the 10-period moving average. Maybe this thing still needs another day or so before this 10-period gets close to it. But I'm going to go back here on this day right here and look at that high on that red candle. If it takes that out in the next day or two, I want to know about it. So 130.84. We're going to go 130.85. And this was from the TI composite ratings. All right, I have 2 more for you. Roku, a popular name, and it's showing up on this thing, so it means that it is healthy. It's not just a technical one-trick pony. This thing has some fundamentals behind it. It's even got some short float behind it at 19%. Stubborn people. Another beautiful chart. I'm going to guess, once again, earnings. Yep, 8 days ago. Not too much of a give back. Sideways, sideways. Look at what's happening to the price action as this 10-period moving average comes up to meet it. It's being repelled by it, and it wants to move higher. I think if it takes out today's highs, it's probably a foregone conclusion. It'll go back and assault this high back here. So let's get an early start on this one. Call it 59.98 is the high. We'll go 59.99. 59.99, and we got this one from the TI composite rating top list. Soon to come for you guys. Not trying to tease you, just giving you fair warning. And lastly, chip maker AMD caught my eye today. Once again, I'm going to guess earnings back here. Here's a nice earnings pop. Went up day and a half, 2.5 days, pulled back. The most it could give back was about to this level, and it's slowly been creeping higher. Had a nice close 3 days ago and just took out, I'll put up a mark there so you can see, it just took out that 5-6 day highs from a few days ago and closed on a nice green candle. So let's get rid of that and let's look at the high of this close. And if it follows through tomorrow, we want to know about it. 2042. So we're going to go 2043. Once again, TI comp rating. All right, so now we have created about 8 price alerts. And I'm going to go ahead and share them with you. And you guys know the drill. When you have a cloud code, just right click and save that cloud code. And then once you've saved it to your clipboard, you come up here to File, Load from Cloud, and you'll be able to load it. And it'll load into your existing price alerts. So here's my price alerts page. We cleaned it out 10 minutes ago, and now we're back to a clean slate. Nothing has triggered, but all 8 of these are working. So for anybody who wants to use their price alert feature like I am, I'm going to share the 8 selected alerts. We're going to create a code for these, copy them all, and I need to paste them. So I'm going to the GoToWebinar. Price alerts is what I'm typing, times 8, and copy paste, Control V. So anybody, I'll just demonstrate real quick. I clicked on that link and look what happened. This page comes up, all right? Okay, so if I take that, I copy that URL, then if I come over to Trade Ideas, Load from Cloud, there it is right there, price alerts. I'm not going to load them because it'll duplicate them, but if you highlight and click load, it's going to add these 8 price alerts that we just walked through and talked a little bit about each of them. It's going to add those to your price alerts, and therefore when any one of these 8s trigger this week or next week, we're all going to see them at the same time, which is cool. All right, so that's really all I have today prepared. We went the full 45, 46 minutes. I'll be back with Andy next week to help me out, but I'm kind of running out of voice juice here. So I see you guys typing in. I appreciate your comments. I'm going to turn it back over to Scott, and if somebody has a pressing question, I can always type it in there before we end it up. But let's go ahead and bring Scott in and talk about what's coming up.
Great. Yeah, thank you, Steve. A couple items on the way out. Most of you already know, but some of you might not, that we have a podcast, new episodes every week, so make sure you're subscribed so you get the newest ones. Just search for Trade Ideas Podcast in your favorite podcast application and add us as a subscription, get the newest episode, and stay tuned for the upcoming episodes. There's a great ebook out that Steve wrote a chapter or 2 on. Get it at trade-ideas.com/ebook. It's 5 strategies to keep winning in a post-BTFD market. So get those 5 strategies, learn them, get the PDF, and be ready, be prepared. Just go to trade-ideas.com/ebook. As Steve mentioned at the top of the show, we've got a event coming up. Just go to tradeidea.com. You can go to the next slide. Yeah, tradeidea.com. To check out the details about the event and get a ticket. If you want to be notified about the live stream, which we'll also have in addition to people attending the event, you can also just plug in your email on the page, and you'll get notifications as we announce them. But it's the best way to get your ticket, and the tickets are cheaper now. They're going to double in price in September, so it's a good time to book. We've got a discount code for you that's good this month, August Alpha, just all caps, and that saves 15% off your first month or year of Trade Ideas. And for now, you can still use this to do upgrades. We're probably going to change out how the upgrades work later on this week because we did a new back-end change, so that's how the promo codes are applied to that are going to change a little bit too. But for today, tomorrow, and probably Thursday, you can still use the same codes that we're using everywhere else to save on an upgrade. So before we get confused with the change-ups, go ahead and take advantage of that now, and you'll be all set. If you have any questions, send us an email to info@trade-ideas.com. That's the help desk email address. I follow Steve on Twitter at TodayTrader if you're on the Twitters. Facebook.com/TradeIdeasPro is the place to find us on Facebook and like our page so that you get our updates and share our updates with your friends. If you have any questions, again, just send the email to info@TradeIdeas.com. Thanks, Steve. We'll have the recording up later on tonight or tomorrow. Y'all have
All right. Sounds good. See you next week.
Later.